Today is January 11th. It's time to study and practice. Wow, I've learned something. I believe I'm on to something. And once I become very good at this particular study, the study is chart formation. The chart formation provides entry and exits. It also provides stop losses as well. And it also sets limit orders. Do not delete this. This is very, very important. So, I'm going to review this, and that's what I'm going to be studying. And I believe it is definite that's where the key is. That's where the key is to day trading right now. So, what I need to do is look at the behavior of the market. Look at the shape. And I've seen this pattern before. I've seen it. I've seen it last year, and I'm seeing it today. And one of the patterns is rounding. When it rounds, it causes the stock to reverse. And even if I'm wrong, it's a good idea to exit when that happens. Because statistically speaking, usually when it rounds out, it means it's about to reverse. That's the same thing as like a double top and a double bottom, or head and shoulders. And that should throw caution to the wind. And today, I saw that on Boeing. After I got in, I saw the first, as I was long, and I'm thinking, oh, that has an interesting round shape. Perhaps I should think about exiting. But I did not heed my own words. Right now, heeding my own words is questionable, because I asked myself on Costco, I should, even though that would have been the right thing to do, I said to myself, hey, you should disable the stop loss. No, never again. Okay, that's how you lose massively. Who knows what's going to happen? It's a green day, so the statistical probability of a huge loss was not going to happen. Still, on a stock by stock basis, it's not prudent to disable the stop loss that's been enabled. It's a good day today. Now, one good thing that I did with Google Trade was, essentially what I did was I set the stop loss, and I thought to myself, oh, it's going to stop out. It's gonna stop loss. It's gonna stop out, and sure enough, it sure did. Had I seen that, I could have disabled and said, oh, maybe I should just exit. So trade management is very, very important. This is a full-time job. It's not a part-time job. Okay? So if you want to be paid well for the work that you do, I need to be monitoring what I do. The trade is not over. The trade is not over when I buy the stock. Trade is only over when I exit the trade. That's what I need to be aware of. These are things that there's valuable information in this video right now. Number one, I have to watch this over and over again, so I'll make it brief. Okay, that last part about the last part about this is very, very important. This is really, really important. Trade management means the trade is not over when I set the trade, even if I have a stop loss and forget, because something could happen in the meantime. And therefore, what I need to do is make sure I monitor the trade as long as possible until the trade is over. When the trade is over, then when I sell the stock, then the trade is over. Okay, that's something that I need to be working on as well. So today I learned, today is a very, very interesting day because it's giving me ideas on what to do without actually spending an enormous amount of money trying to figure out what I should be doing. Okay? Today is the beginning of a lesson that is less expensive than other times, because what I would do is I would take this information and I now know the studies that I need to do in order to make my trading far better. And so so that I will be working on. And so let's I want to make sure I get this right. This is so important. And I'm thinking to myself, why can't people make money after knowing this stuff, right? That's essentially well, there's a lot of YouTube videos out there that talks about like trade management. So you know a lot of facts. One guy said, you know a lot of facts, but what you do with that fact is important. So what do you do when this happens? What do you do when this happens? That's something that I need to be aware of. And also, if the trade is not going my way, and I know that I need to exit, then I just need to exit instead of waiting for the inevitable to happen, which I knew that was going to happen. So let's say Costco today, it was actually green for a little bit and it started to reverse, but it was all within the bounds of it was all within the bounds of the limit and the stop loss. And so that's something that I need to study on. And well, this is an exciting day. I lost about 5% of my account, a little over 5% of my account, but that's a very, very inexpensive lesson. So I look forward to. So let's recap. Let's make sure I understand this, and that's what I need to do. Instead of like dozing off at the office after work, what I need to do is work on these things. I know now the study plan. There's a trading plan. There's other plans. Now I have a study plan. See, when I was a novice, I didn't know what to study. I just had to like grab for everything, right? The idea is to trade until I win, right? But I don't know what that meant. What do I need to study? Now what I need to study is understanding the behavior of continuation and reversals. And continuation and reversals happen all the time. Every day. On a tick-by-tick basis, it happens on an intraday multiple times. That's one of them. Okay? This is a profound knowledge right here. This is profound. This is a profound thing that I am. Oh, what the? Oh, okay. That's a fire truck right there. Okay, so this is, oh my God, I'm onto, I believe I'm onto something. I believe I am. This is great. This is great stuff. Um, this is great stuff. I'm not sure where this is coming from, but this is great stuff. So I need to. I'm going to wash dishes. I have. I might just make it. This is very, 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 very good. This is it. This is truly the way that I needed to be trading. The stop loss was just one of them. It just helped me to buy some time until I figure out how to trade. After I figured this out, then I have to do two more things. One of them is picking the right stock. The second part is sizing up. Those are the two remaining things. After I understand the belly, the meat of day trading. The meat of day trading. The meat of day trading is essentially knowing the chart formation, okay, and the price action, and the fundamentals, and what else? There was something else that I mentioned. I have to know those. Okay, I'm gonna review this video, so I may not have to. I probably need to make it short so I can review it. So those are the three things that I need to do, and then after that, then I need to do. I need to pick the right stock, and then also I have to start. I have to understand how to size up. Those are the latter things that I need to do. The belly, the big meat of day trading is. I've already set the stop loss. I'm doing that right now. That gives me time. Every trade that I made, I had stop loss. Okay? Boeing, it was somewhere in between, so I just sold out. So, that is a huge step. Now I need to fine tune, because what I've missed out, what I noticed today, I guess what I need to do is describe what I did. So I bought Google and I set a stop loss and I saw it. I was monitoring it, and then it stopped out, sure enough. But before it stopped out, I knew it was the wrong trade. I should get out, right? I knew. I should have sold that when it was up a few bucks, but it just eventually just stopped out. So that I could have saved some money there. And also I had Win. Win was the same story. I could have made a couple of bucks and then exited, but the trade never manifested, and then it just stopped out. But the thesis was correct for the Win. Google, the thesis was incorrect, completely incorrect. So that's that. Now I traded Costco. Now the Costco, I didn't set the stop loss at the right place, because it was in a channel, and my stop loss was right at the edge of the channel. And on the last fifth bounce from its channel, it dipped a little bit, triggered my sale, and then started going up. So what I should have done was put a stop loss sufficiently away from the channel bottom, and then taken my call and then set my stop loss there. Now, that's that. Now Boeing, I was observing that, and I noticed that there was a rounding effect, which is a typical characteristics of a stock that's about to reverse. That is a reversal characteristic. So whenever I see something, so essentially the market is either in three states. One of them is just going sideways. The other one is moving in a trend, or it is about to forming a reversal. So these are the things that I need to carefully study up on. So I need to become a master of the chart formations within an intraday to help me understand how things work, so that I could exit the trade early, or I could, yeah, exactly, that's what I mean, is exit the trade early, and or so in order to minimize my losses or increase my gains or save my gains. So or if I notice a particular trend that's forming within a trade, then I keep monitoring it. If it's a continuation trend, then I can hold it. But as soon as something changes, then I can immediately sell, because there's a possibility the stock will retrace within a single day. So this is a very, very exciting thing to do, and this is something that I need to categorize. That's what these people are talking about. Some of these people utilizes moving averages. Now the moving averages do tell a story. It does. It's the same thing. Yeah, it does. It does have similar characteristics. The difference between moving averages and a candlestick is that candlestick formation has a one or two candle that shows and exhibits it actually does the same thing. So the candlestick and the moving averages provide the same amount of information, but the candlestick provides a more up-to-date information. Because what happens is, let's say there's a sufficiently large green candle within a large swath of mixture of overwhelming red candles versus smaller green candles, and then there's an enveloping green candle. That causes the stock to signal a possible reversal. But a moving average just swallows up that green candle, and it does not provide a sufficient detail into what the stock is going to do. However, on a historical basis, it provides the same amount of information. I've also noticed something about the VWAP. VWAP was essentially pointing south for some of the stocks, and the VWAP was pointing north for some of the stocks, such as technology stocks, where the VWAP was going up. But the Dow Jones, some of the stocks were actually pointing down, which meant that it was bearish, and so it would have been better to essentially utilize puts instead of a call. So these are the things that this is a very, very valuable video, very, very valuable. I hope to review this when I get back.